Hi, everyone. I'm Brian Estes. I'm the CEO and CIO of Off the Chain Capital. We run the #1 performing blockchain fund in the US over the past 4 years. It's our privilege to have Michael Saylor as our guest today to talk about Bitcoin and balance sheets and what this means for everybody. And so, Michael, are you there?
I am. Thank you for having me.
Yeah, thanks for joining us today. So it's been about a year since you and your board decided to, take cash off your balance sheet and invest it in Bitcoin. And not only did you invest your cash, but like Perry Ann mentioned, you borrowed money to buy Bitcoin, and now you have a shelf offering for $1 billion to buy potentially more Bitcoin in the future. So I'm kind of curious, you made a decision a year ago to go into Bitcoin. Like, what have you learned over the past year that you didn't know a year ago?
I think that's what's most impressive to me about Bitcoin is learning about the second order effects of an open monetary network. I mean, Bitcoin is a digital monetary asset on an open, permissionless network. And because it's decentralized and no company and no country owns it, it's really a thing for the world. So I don't think there's any other asset that I can think of where every intelligent person that understands it decides to start doing everything they can to make it more valuable. And that's a subtlety. If we had bought 1,000,000 acres of land in Texas, I wouldn't have computer programmers in Singapore trying to figure out how to drive up the value of my land in Texas. And if we had bought $1 billion worth of Apple stock, I wouldn't have people in China and Russia and Europe and South America figuring out how to harness the power of volcanoes in order to drive up the value of my Apple stock. I wouldn't have the mayor of Miami, the governor of Texas, the president of El Salvador. You wouldn't have big tech companies trying to figure out how to, drive up the value of that asset. So unlike gold or bonds or equity or real estate, this is truly a global open phenomena. Anybody can participate in it. If you have money, you can bring the money to bear to drive up the value of the asset by buying it. If you have technology like Square or PayPal, you can bring the technology to bear by integrating Bitcoin into your technology, helping yourself and the asset. If you're a trader, you can short the future, buy the spot, lock up the asset, drive up the price of the asset. And you can do that anywhere in the world. So everybody that has any gift or any ambition looking to do something good for their own company and to build a better world, I think as soon as they see Bitcoin, this light bulb goes off and they realize, wait a minute, this is maybe the greatest opportunity of my lifetime. And I knew it was, when we bought it a year ago, we bought it as digital gold. And we thought, well, this is a better gold than gold. And I've waxed philosophic about that many times. But I think that the thing that came in the next 12 months is not just digital gold, it's digital gold on an open monetary network, which means that hundreds of millions of people are going to be thinking really hard about how they enhance the value of that gold. And because you can program it, and because you can upgrade it, and because you can integrate it into an insurance company or an exchange or a mobile app or a device or a government or a corporation or an insurance policy, that means that you've just got every intelligent, progressive person on earth that understands it, figuring out how to upgrade it. I don't think you can say that about anything else on this earth.
Mm-hmm. Yeah, one of the first interviews you did about a year ago, you were early to understand that domain names have, they're a scarce asset on the internet. And you were early into buying up domain names. And I remember when I graduated college in 1990, a couple of years later, a lot of my friends were buying up domain names, and I thought they were crazy. I just didn't get it. And so when I learned about Bitcoin, I equated the two, and you helped me understand how Bitcoin are kind of like domain names. They're a finite resource on the internet. I was wondering if you could talk a little bit more about that, because I haven't heard you make that analogy recently, and I think that's a very worthwhile way to look at things, or a way to look at Bitcoin.
The way I thought about domain names on the .com is you have a chance for the first time in human history to own an English word. So I bought my name, Michael, because now everybody on the planet that could spell Michael could type michael.com into a search engine and come to me. And then I thought I might as well buy my nickname. So I bought Mike if they were like short. And then I thought, well, I guess I could buy wisdom and strategy and hope. And so I did that because I figured that wisdom had a positive connotation in the English language for 500 years or 1,000, and it would have a pretty good connotation for the next 1,000 years. And so domain names were about owning a word and whispering it into cyberspace. And when you whisper the word voice, then you jump over 8 billion other choices and you own voice. And I was able to sell voice, just that naked domain name, for $30 million. I didn't want to sell it for 30 million. I thought I wanted it was worth billions and billions, but I sold it for 30 million because I wanted to set a comp, and that was the highest price anybody had ever paid for a naked domain name in history. And it's kind of simple. It's like you own the word voice in the English language. What does that mean? Well, I think the analogy with Bitcoin is the greatest city in cyberspace, constructed of 21 million blocks of encrypted energy. So it's Manhattan in cyberspace. One day, billions and billions of people want to live there. You want to develop the 21st century economy on that digital property. And once you bought one Bitcoin, you bought 1/21 millionth. You've got one block in cyber Manhattan, maybe for all of eternity. There's no reason why Bitcoin can't go on for 1,000 years. They'll keep upgrading the nodes and upgrading the software and upgrading the hardware. But the idea is pretty much, who owns the 21 million blocks of cyber Manhattan? And owning cyber Manhattan is actually more valuable than owning Manhattan, because if you bought up all Manhattan, every block around Central Park, that would have been pretty valuable because that was the greatest city in America. But there was Paris and Tokyo, and there was London, and there was Beijing, and they all had something to recommend them if you were Chinese or Japanese or French or British. On the other hand, when you're buying Bitcoinville or cyber Manhattan, everybody wants to own a block in the greatest city in cyberspace. Doesn't matter where you live, doesn't matter what language you speak, it doesn't matter what culture you come out of. No one is prohibited. And so why wouldn't you want to own Central Park in the greatest property on earth? Especially because, Brian, you need that property as the granite upon which to build the banks, the insurance companies, the exchanges, and the retailers in cyberspace in the 21st century. So when you own $1 billion of Bitcoin, you can move it at the speed of light on the Lightning Network. You can program it with 1 million transactions a second. You can have 100 million computers speaking to each other every day. And the velocity on that money is something that is just, never seen before. We can't move gold around that fast. We can't move you can't move $1 billion with Apple stock around that fast. You can't program it. So Bitcoin represents the critical property to build the new age economy. And it's the dominant network, and you get to show up 100 years before everybody else understands that, of course, this is the thing. That's what's exciting.
Yeah, I find that exciting too. And just to simplify it to, like, when I was growing up, my father used to tell me, I need to invest in land. God's not making more land. And I tell my children, you need to invest in Bitcoin. We're not making more Bitcoin. There's 21 million. So I agree with you. It's the finite supply that creates the value. So I want to circle back to you hosted something last night on Twitter Spaces, and it was a meeting with the Bitcoin Mining Council, and there was so much interest in that it pushed Twitter Spaces like over its capacity. And so there's a lot of misinformation that's been spread recently about Bitcoin's energy use and its carbon footprint. And some of the facts that were put out last night in the meeting that you were hosting was that worldwide total energy production is 160,000 terawatt hours. And just the lost energy through the transmission of electricity is about 50,000 terawatt hours. And Bitcoin only uses 120 terawatt hours, not 120,000, 120 out of the 160,000 total terawatt hours. So if you do the math on that, that's 0.0755% of the world's energy production. And then Cambridge came out with a report recently that showed the carbon footprint of Bitcoin. And Bitcoin's carbon footprint is 44 million tons of CO2. Gold's carbon footprint is 144 million tons, which is 3 times more than Bitcoin. The finance and the insurance industry is 1,368 tons of CO2, which is 31 times Bitcoin. And the military industrial complex is 2,500 tons of CO2, which is 56 times more than Bitcoin. And I'm just curious, why do you think there's so much misinformation about Bitcoin's energy use and how it's hurting the environment when there are so many other things that are so much worse than Bitcoin for the environment?
I think Bitcoin is the most disruptive technology in the decade. It's the single most exciting thing going on in the world right now. And so everyone in the world is being asked about it. And in order to understand it at a basic level, you need 10 hours. To understand it moderately, you need 100 hours. To understand it decently, you need 1,000 hours. And to really master it, you need 10,000 hours. So in that period, I would say that Bitcoin became an institutional phenomenon following March of 2020. So we're like in year 1, you could even say year 0 was March of 2020. And then after February 8th of 2021, when Tesla announced that they're putting Bitcoin on their balance sheet, it kind of broke into mainstream. So we're in the first year where every mainstream politician, every mainstream journalist, every mainstream business person is being asked what they think about Bitcoin. The CEO of General Motors, right? Every banking head, every investor. And if it takes you 1,000 hours to really get it and 10,000 hours to master it, but everybody in the world is forced to take a position on it with less than 1 hour or 2 or 3 hours of knowledge, then you're going to get a wide variety of reactions. And the 2 most common ones are, well, it sounds so perfect, I guess some politician will ban it. Well, that's an interesting reaction. It sounds so perfect that someone might not like it. And the other reaction is, I hear it uses a lot of energy. Well, because there's nothing else negative to be said about it. I mean, literally, it's a perfectly engineered monetary system. For the first time in 5,000 years, we've created triple entry accounting. And once you understand that you've taken double entry accounting and you've fixed the flaw, which is that people could reverse the books or cook the books or disagree on the transaction, you're like, wait, we perfected accounting that we can trust. Okay, so what's the catch? Oh, it's too good? No, the catch is it uses energy. How much energy? Well, I mean, 7 basis points, 0.07% of the worldwide energy mix nominally, but more like 1 to 2 basis points economically, because the nominal energy used is being bought at 2 cents or 1 cent a kilowatt hour, not at 10 cents a kilowatt hour. So it's like 1/100th of a percent of the economic value of energy in the world. And if you look at the CO2, you know, per those stats, like 9 basis points of all the CO2 and, you know, exhausted. And of course, if you look at energy intensity and you ask, well, I put $1 of energy into something, how many dollars do I get out? You know, when you put $1 into Google or Netflix or Facebook, you get out $10. And when you put $1 into Bitcoin, you get out like $180, maybe $200. It's 20 times more efficient than streaming video or search or social media. And if you put $1 into an S&P 500 company, you get out $4. So, you know, you're talking about 50 times more efficient than the S&P. If you put $1 into an airline, you get out 40 cents. So if you're looking for where we really burn energy, it isn't hard to figure it out. It's the planes, trains, automobiles, and the HVAC. And Bitcoin itself, I think it has the claim to many honorifics. One of them, it's the most efficient use of energy the human race has yet to devise. I'll put a period on the end of that. It's the most effective technology converting energy into prosperity we have ever invented. It's also the highest value and use of stranded energy or intermittent energy in the world, because you can generate, at this point with the latest generation of miners, you can generate 40 cents a kilowatt hour on an energy source on the North Pole. You can go to an island that's got a volcano on it. You can monetize it at 40 cents a kilowatt hour. You can't do that with Google or Facebook, which are the second best, because Google would have to have these super high bandwidth trunk lines, fiber optic cables to stream their videos, and they can't use all the energy from the volcano. So you're not going to see Google and Amazon and Facebook set up data centers 1,000 miles from civilization because of the bandwidth requirements. What you are going to see is that every place where there is a waterfall or a volcano or wind blowing and that energy is stranded, then we're going to rescue that stranded energy with Bitcoin. And someone's going to pay attention to it and they're going to notice it. And from time to time, some politician will disagree with the energy usage, and maybe they'll decide that they don't want you to burn coal, and they'll ban coal or they'll ban Bitcoin, and then it will move to somewhere else. And if they decide they don't want to use volcanoes, then it'll move to reactors. And if you don't want to use nuclear reactors, it'll move to wind. And when people get sick of windmills because they mar their view, they'll move them 1,000 miles away. And then if someone takes a photo of the windmill 1,000 miles away and posts it on Facebook or Twitter, and we decide to get rid of that, you know, we'll be using nuclear fusion reactors somewhere, somehow. It's at the end of the day, the energy usage of Bitcoin is a feature. It's not a bug. And Bitcoin is not just the most disruptive force in the monetary system. It's also the most disruptive force in the energy system, the energy technology. And so it's very interesting to see both of those things happening at the rate that they are.
So we have about 3 minutes left, and I just wanted to get to one subject before we have to close down here. We met at your home a few months ago down in Miami, and we spent an hour talking about the accounting rules around Bitcoin and how they negatively impact corporations by putting Bitcoin on their balance sheet. And that's something I had never even realized or heard of before. And I think most people don't know this either, but I think it would be worth our time to spend the last few minutes here to talk about that subject. And you know, you run a public company, you've seen this firsthand. Can you explain to people what why it's so the balance sheet to put Bitcoin on it?
Yeah, so the idea, the problem is Bitcoin is currently deemed by GAAP accounting in the US as an indefinite intangible asset. And that means if you buy $1 billion of it, you're required every second of the day to shop for the lowest bidder. And on a Saturday night in Singapore, if someone wanted to pay you 30% less for that, you have to mark down the entire $1 billion by 30%. And so you take a $300 million write-off and it becomes an operating loss in the quarter in question. then you carry $700 million on your balance sheet forever. And if it goes up to be worth 10 billion, you're still showing 700 million in asset, and the 9.3, which is the market, the additional market value, is not shown in a GAAP accounting statement. You won't see it on the ever reflected in the P&L. You won't see it reflected in the balance sheet, which means the company that has $10 billion of Bitcoin in the quarter where Bitcoin price doubles has exactly the same P&L results as a company with $1 of Bitcoin in the quarter where the price doubles. So there's no transparency to any investor. It's problematic. And of course, if you're a casual investor, you can't really understand the financial situation of the company without extensive pro forma schedules. So as a practical matter, a public company needs to create pro forma non-GAAP operating income schedules to relate the non-GAAP results to the EPS results. And then you need to provide people enough information for them to do their own calculation about how much asset you really have. There are other accounting treatments, other accounting systems where they wouldn't do it that way. They would treat it as a financial asset, and you would mark it to market. And so if you held Bitcoin in a fund, if I had a mutual fund and it was backed by Bitcoin and the price of Bitcoin doubled and the fund doubled, I would actually mark it up and I would take investment income and I would actually mark it on my balance sheet, because fund accounting is different than commodity and Bitcoin accounting and property accounting. And if I was a foreign company with a different accounting standard than FASB, then I might very well carry this as a financial asset. So the summary there is, what that does is it advantages the individual, because the individuals don't concern themselves with GAAP, so they're advantaged. It advantages private companies because they're not concerned. It advantages institutional investors because they have a different accounting treatment. And it advantages foreign companies that have a different accounting treatment than the FASB GAAP treatment in the US. It disadvantages publicly traded US companies under FASB GAAP accounting. And it makes it challenging for Apple Computer to buy $25 billion worth of Bitcoin, because you would end up with the volatility of Bitcoin washing through your P&L, creating optical confusion. Then you have to pro forma it out. And so if you're a very conservative CFO, you would think, maybe I'm just going to keep this to 1%, 2%, 3% of my balance sheet. If your concern is just make the right economic decision, then you wouldn't make it based upon that indefinite intangible. You'd make it based upon, pro forma cash flow rational, right? So that's the issue. I think that the U.S. industry and the U.S. investors will benefit if that accounting gets reviewed at some point in the future.
And if it does get reviewed and changed, what do you think happens?
I can't speculate. That's not my decision. That's FASB's decision.
Mm-hmm. Okay.
Yeah, so I can just tell you, how I view it personally, right? And my personal view is, if I have $10 billion worth of Bitcoin, I think it's $10 billion, right? And if it happens at one point in the past that it was only worth $300 million, but today it's worth $10 billion, I tend to make the decision that, I look at the price I could sell it at in the open market, and I would use it to make rational business decisions. But the accounting is the accounting. Oftentimes, GAAP accounting is different than non-GAAP accounting. And there are all sorts of examples in the public markets where a publicly traded company will do non-GAAP adjustments where they have to do with like currency fluctuations or the cost of non-cash charges to stock options and things like that. And normally you just print those as pro forma schedules for investors.
Okay. So our time's up. I want to thank you again for joining us today.